Hey, Derrick Smith here, senior trader over at T3 Trading Group, and I just wanted to update everybody on the CPI number that was expected to come out earlier today. There was a lot of anticipation around this number. For most of my career, I don't really ever remember the CPI, which is tied to inflation, obviously, being a super important number, but obviously in these recent months it certainly has, because the degree of inflation is going to impact the speed in which the Federal Reserve increases interest rates and the speed in which we get through tapering. So the CPI came in at 6.8% year over year in November. That is the highest inflation reading since 1982. Pretty bad, right? Well, the market went up on it. And not only did the market go up on that number, it's exactly what we expected. My team and I, we thought that if CPI would come in line or lower than 6.8%. So 6.8% was the expectation. We figured if it came in at 6.8% or lower, that the market would probably really rally on that, and that only if the market gave a completely abysmal number on CPI, like in excess of 7%, well above expectations, could that actually be bad for the market. So why is it that we thought that the 6.8% year over year CPI number that came out for November, why did we have the thought process that could make the market go up? It was already priced in. The market was expecting the 6.8% number. And even though it's scary, it has had time already to price it in. The market is already expecting, because the Fed said that they're gonna do this, an increase in the rate of the taper of asset purchases by the Fed and potential shorter timeline until when we begin to raise interest rates. It's already priced in the market. We've already known this for weeks or even a month or two now at this point. So when that's already priced into the market, and we can just get this CPI number out of the way already, get it over with, the market almost breathes a sigh of relief. Oh, it's exactly what we thought was coming. We don't have to worry about it anymore. So let's hit that buy button and rally right up. The second that number hit at 8:30 this morning Eastern time, the S&P ripped higher, the NASDAQ ripped higher, and there's been a lot of volatility again today because there's been a lot of volatility pretty much every day the last 3 weeks. But for the most part, the market's still trading higher even at this point, led of course by Apple. So that's where we are with the inflation number, the CPI. Your cash is readily becoming worth less and less and less. Maybe that's why people are piling so much money into a stock like Apple right now. They're viewing it as a safe haven. That's where we're at. That's your update. We're trading higher. We'll see if that can continue. Catch you next time. If you like what you learned, you should definitely check out the Pro Desk virtual trading floor that I'm running. There's some links in the description there where you can learn about how you can get involved. And there's also a link to my free ebook where you can learn about becoming a professional trader at T3 Trading Group like I am. See you everybody next time.